Hello and welcome. I'm Saeed from StoryPlanet.net. Dive right into the essence of the most captivating books without reading them cover to cover. Whether you're on the go, at the gym, or just relaxing at home, we offer you a unique and enriching listening experience. Today, we are exploring the book, Narrative Economics, a creation by Robert J. Shiller. In Narrative Economics, 2019, the focus is on how common stories impact economic behaviors, such as Bitcoin's rapid ascent and stock market downturns. This perspective delves into the power of collective human narratives driving these occurrences, going beyond mere statistical analysis. Before we delve into these revelations, it's interesting to note that Robert J. Shiller, a Nobel Prize-winning economist and author of the bestseller Irrational Exuberance, is the sterling professor of economics at Yale University. He also frequently contributes to the New York Times. With 8 key ideas to unveil, brace yourself for a deep dive into this captivating book on StoryPlanet.net. To start, the text introduces the idea of how narratives influence economic events and promotes understanding of the connection between storytelling and economic dynamics. The text highlights the importance of stories and narratives in driving economic outcomes and behaviors, stating that they are often overlooked in economic analysis. Narrative economics proposes considering collective stories in understanding financial events. It discusses the impact of popular stories on economic behavior and outcomes, providing examples like epidemics, Bitcoin, and investor behavior during world wars. Key idea number 1. Narrative economics focuses on how collective stories influence economic behavior. Narrative economics focuses on the collective stories that influence economic behavior. Unlike traditional economists who rely solely on figures, narrative economics considers human stories and beliefs crucial to understanding economic events. Examples like the narratives surrounding Donald Trump's election and the stock market crash of 1929 emphasize the impact of these stories on economic outcomes. John Maynard Keynes was known for considering public feelings in his economic analysis, highlighting the importance of narratives in economic understanding. Key idea number 2. Bitcoin's success demonstrates the influence of storytelling within economics. In 2008, Satoshi Nakamoto introduced Bitcoin through a paper, remaining anonymous. Bitcoin's success is driven by its mysterious narrative and promise of a new financial system. Investors are attracted to the futuristic potential and the idea of a currency outside traditional authorities' control. The narrative surrounding Bitcoin has been crucial to its widespread appeal and success. Key idea number 3. Studying epidemics can provide insights into economic stories. Different university departments are highly specialized, but collaborating can enrich their insights. Economics can learn from epidemiology, specifically regarding narrative epidemics. By studying how diseases spread, such as through contagion rates, recovery rates, and death rates, insights can be gained into economic narratives, which also spread contagiously through various platforms. Understanding the patterns of epidemics can help anticipate and respond to contagious economic and political stories. Key idea number 4. Narratives are often connected or relate to one another. Sometimes stories gain significance when connected to other narratives. The Laffer curve, popularized by economist Arthur Laffer in 1974, shows lower taxation can yield more revenue, important for conservative politicians like Reagan and Thatcher. This idea aligned with Ayn Rand's novels and the narrative of government inefficiency. Understanding a narrative may require recognizing its connections to related stories for a comprehensive view. Key idea number 5. Economic stories rely heavily on specific, vivid details to convey their message effectively. Humans naturally create narratives to interpret events. Specific, vivid details can influence the outcomes of decisions and shape economic narratives. For example, during a recession, the vivid impact of 9/11 initially suggested further economic decline. However, with inspirational leadership and a change in narrative, the economy recovered as people defied the expected downturn. Vivid details can have a profound effect on shaping economic narratives and outcomes. Idea number 6. The text is about recurring economic narratives. The economic narrative of panic versus confidence is a recurring theme shaping events over time. This concept has its origins traced back to historical financial panics, such as in 1857 and 1907. The narrative highlights the importance of confidence in businesses and the economy for prosperity. Additionally, related narratives like the stock market crash have resurfaced in events like the Great Recession of 2007-2009, reflecting historical patterns of boom and crash. These enduring narratives continue to influence current economic events. Key idea number 7. Narratives can have varying economic effects over time. Memories and narratives, whether personal or economic, can evolve over time, shaping our understanding of past events. The impact of narratives on economics can change with time, affecting investor confidence. The memory of historical events like the 1987 stock market crash and World War I influences present-day decisions, even though circumstances may differ. The evolution of narratives, such as viewing World War I investments positively during World War II, can lead to contrasting reactions and behaviors. Key idea number 8. Studying narratives can help predict future economic events. Nurturing an understanding of narratives can aid in predicting economic events. To achieve this accurately, economists should rigorously study narratives drawing on various disciplines like the humanities, neuroscience, psychology, and AI. Utilizing advanced tools to scrutinize vast data sources such as social media, focus groups, and market research can help identify impactful narratives on the economy. By mastering narratives, policymakers can influence public behavior during economic crises, as seen through historical examples like Roosevelt's fireside chats during the Great Depression. This comprehensive approach empowers policymakers to proactively engage with economic events, shaping outcomes rather than simply responding to them. In conclusion, stock market events are influenced by popular narratives, which can impact decision-making. Understanding narratives alongside economic data can enhance preparedness for economic fluctuations. Feedback on the content is encouraged. Fishing for Fools explores how our economic system exploits vulnerabilities and encourages wise decision-making. Thank you for listening to this summary. If you enjoyed this exploration, we invite you to discover other fascinating books on storyplanet.net. Don't wait any longer. A multitude of books, stories, and knowledge await you there. See you soon on storyplanet.net.